Hey guys, what's up? Welcome back to my financial focus. In today's video, I'm going to be talking about the recent news that came out surrounding Warren Buffett's move with Hewlett-Packard. Hewlett-Packard, as we can see right here, specializes in selling personal computers as well as printing software. And we can see that over the last week, on Thursday when it came out that Warren Buffett had bought a pretty substantial stake in the company stock. We can see that HP increased from about $34 to $35 per share to about $41 per share in one day. So that's an increase of close to about 10 or 15% at one point on Thursday when the stock was trading in a single day. So I'm going to talk about that in this video, and then I'm going to go into detail as to what HP's intrinsic value is so we could figure out if it's still a buying opportunity after this recent enormous stock price movement that it had. So as we can see right here in this article, it talks about Warren Buffett made a $650 million profit after his HP stake was revealed. And the reason why that is because he obviously bought into the stock at lower prices. And we can see down here, they talk a little bit about how he bought 121 million shares, which equates to about an 11.5% stake in HP, which potentially now makes him the largest single shareholder of HP. And we can see right here, it talks about how the actual value of his holding increased up to $4.85 billion. And if I scroll down a little bit here, we can see they talk about how the initial buy-in price was about $4.2 billion. So literally just from buying into the stock and then people or the public hearing the news of him buying the stock, he made $600 million off of that alone. And that's pretty similar to what I talked about in my last video with Elon Musk buying Twitter, where he basically just bought into the stock, paid about $3 billion, a little less than $3 billion to buy a pretty substantial holding in Twitter. He's now Twitter's largest shareholder. And then on that investment, he made $600 million in one day once everybody found out that he bought Twitter. So pretty interesting to see how the market reacts to some of these bigger investors buying into these stocks. And it clearly shows that a lot of investors still care a lot about what Warren Buffett is buying in the markets. And also, he's been talking recently about how it's been difficult for him to find places to get a good return on his close to $147 billion of cash that Berkshire Hathaway is just sitting on, that's collecting dust. And obviously that's something that's really interesting in finance, which is that these pretty extensive returns, especially in Warren Buffett's case, where he's obviously one of the greatest investors, if not the greatest investor of all time, these really big returns that these investors get earlier on in their careers when they don't have as much capital to allocate, they're a little bit hard to continue replicating later on once these investors start collecting these mass amounts of capital, because there's not really many places where somebody can put $147 billion of cash and get like a 20% return in 1 year on that capital. Whereas when Warren Buffett probably had like a couple $100,000 or $1 million earlier on in his investing career, it was probably a lot easier for him to get those really high 50 to 70% returns that ended up having him average a 20% return over the course of his entire career. So we can see right here in this article, it points out HP's largest shareholders. And if I scroll down here, we can see this is pretty interesting that as of April 8th, that was the last time this page was updated, which was Friday. So it's probably going to be updated again tomorrow when the market reopens. We can see top 10 owners of HP. The Vanguard Group Incorporated was, as of April 8th, the number one shareholder at about a 9.85% stake in the company. And obviously now that Warren Buffett has bought about an 11.5% stake in HP, that shoots him up to the top of the list and automatically not only makes him the largest shareholder, but a little bit different to Elon Musk's case with Twitter, as we touched on in my last video, he actually has now become a principal shareholder. And the reason why that is because he owns more than 10% of Twitter's outstanding, or not Twitter's, of HP's outstanding shares. And obviously that comes with a couple of different things that I touched on in the last video. For one, he has to report his stock moves within 2 business days of the trade from now on. So he's not able to remain as anonymous as he might want to be, because he has to be a lot more transparent now that he's a principal shareholder. But with that comes a lot of different advantages, like for the fact that he has much more significant influence over the future of HP's company, in that he can actually vote on appointing certain CEOs, and he can vote for who ends up on the board of directors now. So he has a lot more control over the future of HP, which, if his past investments are to be any tell historically, then that's probably going to be a good thing for HP because his investments in the past have ended up doing very, very well. So now what I want to talk about is HP's business and then figure out the intrinsic value of the company based on some of the financial reportings that recently came out in their 2021 annual report. And so we can see right here, this is a little income statement breakdown where they show the percentage of their different line items as a percent of total revenue. So obviously net revenue is 100% of net revenue. And we can see their gross profit for 2021 was about 21.1% at about $13.4 billion. And then their net profit margin came out to be about 10.2% at about $6.5 billion. We can see right here, they talk about how their net revenue increased by 12.1% from the year ending in 2020, which is a pretty substantial increase. And then on top of that, we can see that their gross profit margin also increased by 2.7%. So not only has their revenues increased, but the cost of actually getting those revenues has declined in terms of ratio to the overall revenues that they were able to generate from that operating year. And the next page that I want to look at is page 58, which shows their balance sheet. And we can see that their total assets for 2021 came out to be about $38.6 billion, up from $34 billion in 2020. And then we can also see that they have negative stockholders' equity, or in this case, a total stockholders' deficit. And this is a pretty interesting line item to see on financial statements. It basically means that the company has more liabilities than they do assets. So they basically, if we're thinking about it from like a personal finance perspective, for example, it would be equivalent to an individual having a negative net worth, like if they had more student loans than they had assets on their personal balance sheet, I guess. So that's pretty interesting to see. It could potentially mean that they won't be able to meet their future obligations in terms of covering their long-term and short-term liabilities. But depending on how a company manages it, it could sometimes not be that bad. And obviously, compared to the pretty gigantic line items for their assets and liabilities at about $38 billion, and then their total liabilities obviously comes out to more than 38, probably like 39 or 40 billion, as we can see right here. It's not like a massive total stockholders deficit, so it does seem to be a little manageable, but time will tell to see how that ends up turning out. And maybe now that Warren Buffett is a principal shareholder, he might change some things in the company that could end up reaping positive rewards for the shareholders moving forward. And so lastly, I want to look at the cash flow statement before I do my discounted cash flows analysis to figure out the intrinsic value of HP. And we can see right here that their cash from operating activities for 2021 increased from $4.3 billion in 2020 to $6.4 billion in 2021. And then their total net cash used in investing activities was about $1 billion, most of which came in connection with business acquisitions, net of the cash acquired from the balance sheet of the business that they acquired. And then we can see net cash used in financing activities. This is probably the most interesting part for me because we can see they provide a lot of value to their shareholders, which is probably one of the things that attracted Warren Buffett to HP in the first place. We can see they give a lot of money back to their shareholders in the way of repurchasing common stock, which is their largest financing line item right here, sitting at $6.2 billion, which is like almost all of the cash produced by their operating activities, which is up from $3.1 billion in 2020 and $2.4 billion in 2019. So they've obviously been consistently repurchasing shares. And on top of that, we can see that they pay out cash dividends to their shareholders too. So they paid out consistent dividends over the last 3 years of about $970 million, or a little under $1 billion per year in annual dividends. So that's probably one of the things that attracted Warren Buffett to investing in HP. He's obviously pretty big on dividends. That's one of the reasons why he's always talking about Coca-Cola and investing in dividend stocks like that. So it's pretty interesting to see. And then we can see that the cash and cash equivalents at the end of the period decreased from about 4.8 billion in 2020 to 4.2 billion in 2021. And so lastly, I want to look at the intrinsic value of the company so we could get a better understanding of whether or not this still presents a buying opportunity after the run-up that the share price experienced. And we can see I got some of these values from Yahoo Finance. So depending on the analysis that some of the analysts in Yahoo Finance did, these numbers could be accurate or inaccurate. And obviously with models like this, there are a lot of assumptions. So I definitely suggest that everyone watching this video does their own due diligence. But we can see that according to Yahoo Finance, they expect or anticipate a growth rate for the next 5 years of about 10% annually. And then for the growth rates for years 6 through 10, I was just conservative and I cut that number in half. And then year one free cash flow, which is the free cash flow for 2021, was $5.83 billion. That's just the operating cash flows minus the investments in PPE, property, plant, and equipment. Then net cash minus net debt, they have more debt on their balance sheet than they do cash. As we saw when we looked at their balance sheet, they have $4.95 billion deficit compared to net cash minus net debt. And then shares outstanding came out to be about 1 billion shares. And we can see that based on that, the intrinsic value per share is about $82 per share with a 30% margin of safety of $57 per share and a 30% margin of safety of $57 and a 50% margin of safety of $41 per share, which compared to their current share price means that HP is still undervalued according to these metrics from Yahoo Finance. So even though their share price has run up from $34 to $41, according to this, HP at a 50% margin of safety would be $41 per share. So that's pretty interesting to see. It means that HP could potentially still present a good buying opportunity for anyone who wanted to buy into it at the current share price. And I actually started doing something new, which I'm introducing in this video, which I'm going to start doing competitor analysis for some of the companies that I'm looking at. And we can see right here, one of the main competitors for HP is Dell. And Dell is pretty similar sized to HP. They both have a market cap of around $40 billion. And we can see that the gross profit margin for Hewlett-Packard in comparison to Dell is a lot smaller, or not a lot smaller, but slightly smaller. But then we can see the net profit margin and the return on assets for 2021 was way larger for Hewlett-Packard in comparison to Dell. So that basically just helps us get like a better understanding of where Hewlett-Packard is ranked in the industry that it's competing in this case, PCs and printers and that sort of technological hardware space. And we can see their net profit margin is almost double that of Dell's, and their return on assets is about like 3 times as large as Dell's return on assets. So that's pretty interesting to see. I would definitely love to know what everyone watching this video thinks about HP. Is it a buying opportunity? Is it a good investing opportunity? And did Warren Buffett make a smart move in investing in an HP? Definitely let me know in the comment section down below. Leave a like on the video, subscribe to the channel, and I'll see everyone in the next one.